Welcome to BIV Today, the daily podcast from the newsroom of business in Vancouver. I'm Kirk LaPointe, publisher and editor-in-chief. Earlier this week, the provincial government released its proposed budget for the 22-23 fiscal year, posting better than expected deficit numbers for the fiscal year ending this March, but deficits over at least the next 3 years. There are no new major taxes coming, but there's also no effort to really please business groups calling for tax reform in British Columbia. We want to look now at the provincial finances with Ken Peacock, the chief economist for the Business Council of BC. Ken also contributes a monthly column to BIV with his colleague Jock Finlayson. He joins me now. Good to see you.
Good to see you as well, Kirk.
It's been such a busy week, but I think let's try to cling to the issue of a provincial budget. What kind of signals did you get as an economist about the direction of provincial finances as a result of this one?
That's a good question. It was difficult to discern any sort of clear signals. In a lot of ways, this budget was take no aggressive measures, stay the course, and get through the pandemic. Generous amounts of funding to address health issues related to the pandemic, not surprising. Lots of funding for supports of individuals and households. But really, if you're looking for some sort of theme or strategy that directs some attention towards measures that would help improve the competitive position of the provincial economy, attract more business investment, support our export sectors, and just any measures that are targeted towards growing the economy, growing the pie, they were very sparse and few and far between. So in a lot of ways, it kind of missed an opportunity, this budget, I would say.
Yeah, I think 5 days earlier, the province revealed a very substantial, aspirational economic recovery plan. Why weren't there, lots of meat put on the bones of that on Tuesday?
Yeah, I think there's a couple factors. It was interesting. You're right. They did release their economic plan. This government did release the economic plan about a week before the budget. So we fully expected the budget to come in behind that and devote more attention to some of the items identified in that economic plan. There was definitely some coordination between the two documents. Part of the challenge was that the economic development plan that the government introduced was kind of more strategic and visionary than sort of meat and potatoes economic development. What might we do to improve BC's competitive position? And because it was more visionary in nature, some of the more immediate spending measures that we would have liked to see didn't show up or materialize in the budget. And I would just add the additional comment in that while we were very much pleased to see economic development and the need to kind of grow the economic pie in BC show up on the government's radar. When you start to dig into some of those measures that were contained and purported to be under the rubric or the umbrella of economic development and improving prosperity, a lot of them were not sort of squarely on improving the competitive position, and we're more aligned with improving households and that type of thing. So even the measures that the government introduced were softer than we would have hoped for.
Yeah, the plan itself had more of a support feel than an enabling of growth and prosperity feel to it. Is that just something we have to get used to with an NDP government, that this is not its forte?
Yeah, there's a few factors. I mean, clearly this government came to power on a platform of supporting individuals, households, trying to address inequality and housing and social supports in general. So yes, it's a factor of the government. It's also a factor of the times. I mean, there's a great deal of concern, obviously, and need to address climate change, inequality, and this pandemic has sort of shifted the landscape as well. So in addition to the government coming to power and following through on its agenda of improving social supports, I think we find ourselves kind of in this climate and global backdrop and external backdrop that is just sort of adding on and making it even more of a challenge. Governments find themselves more and more in need to address these issues. And it seems while that is happening, at least here in this province, the concern about higher paying jobs, which industries are going to drive prosperity, where do we have our competitive advantages, what industries and what sectors can grow and compete and sell their goods and services into the global marketplace. These types of questions seem to have kind of dropped down in terms of priority for the government.
And yet, the inevitability of a lot of the investments that the NDP government wishes to make in individuals and in households comes with a price tag, that obviously needs some revenue to support it. Did you see anything in the budget that hints at where the government feels the revenue can come from in years ahead?
There's certainly the theme. I mean, if you had to identify a theme for economic development and where the government thinks opportunities lies, it's definitely in greening and clean and carbon reduction emissions, that segment and element of the economy. Where we come from and what we're more concerned with, though, is just kind of growing and improving the overall picture. Yes, some niche industries, some sectors hold promise to grow, but many of these green segments and green initiatives and greening of the economy are smaller in nature. We were hoping for, let's take a step back, look at the overall tax burden, what businesses are paying. Let's recognize the reality that business costs have surged dramatically in the last 3 or 4 years. New taxes, employer health taxes, rising fees and premiums across the board, and see what might be done to try and kind of improve the competitiveness conditions and get business to invest more in the margin. I mean, we could talk about PST reform and many of these other things. Those are bigger steps, but really, when you step back and take a look at the margin, there was nothing to kind of address this broad, the hosting conditions environment in the province. There was some boutique measures. One important thing for the Business Council was sort of under the economic development umbrella and strategic initiatives. There is some funding included to address trade exposed industries and the increasingly punitive amounts of carbon tax that these sectors face, while other competing jurisdictions don't face a similar level of carbon pricing or carbon tax. So there is some funding in there. I was a little concerned when I read the details of that it won't materialize for a couple more years. The Business Council, we've been working very, very closely and very, very hard with the provincial government to try and reconcile this challenge that our exporters find themselves in the predicament with the carbon tax. So to us, it's quite a pressing issue because sort of as we speak, capital is flowing to other jurisdictions. The forest sector is not seeing reinvestment. So there is a need to address this and provide some certainty, but the funding doesn't show up for a couple more years. So that was a bit of a puzzle to my mind, at least, Kurt.
Yeah, this week our print edition features more than a dozen of the so-called unicorns, the companies that have suddenly shot up and now have valuations of over $1 billion. You know, as I look at these companies, I wonder like what is going to keep them here, except for perhaps founders that kind of like getting their kids to school, in British Columbia. Again, was there anything here you think that that helps, identify these companies, make them stay put here and not lose them? Or is this just one of these things where the government's kicking the can down the road and saying, nobody seems to be leaving. We don't have any big losses. Therefore, we're not doing anything wrong.
Yeah. When you step back and take a look at the budget, the fact that there was this huge upside revenue surprise, which you noted at the outside, which means, for the current fiscal year, which ends this March, the government is actually probably it's going to post a surplus of close to $3 billion because of the surge in revenues coming from corporate income tax, upside surprise on personal income tax, export growth and revenues from the natural resource sector. All this has led to
and federal money. And federal
and
money.
federal money. So the province finds itself in good financial position for this fiscal year. To my mind, there was this opportunity to carry forward that momentum, send a clear signal that this province is in good fiscal shape, and that they will either be looking to trim taxes and improve the competitive position for these high value sectors and industries in the future. I mean, absolutely. I think you put your finger on an important point. There's something going on in the technology space here in British Columbia. It really is robust. It really is growing. There are unicorns. There's the digital supercluster. Lots going on. So where is the strategic initiative to really double down, take advantage of that, take advantage of our strong position, and say, hey, we want the world's best and brightest here, and we're going to look to trim top marginal tax rates to try and entice and attract people here, rather than this sort of status quo. We're just going to wait and see what's going to happen, with no real signal that this is a place that people want to come and do business and set up operations here in BC. A big opportunity, and I think to a large extent squandered.
Yeah. One area that was a pleasant surprise even for the government that it didn't count on, but if you take a look at it, it makes some sense, is real estate. Right? Like property transfer taxes were 4 times more in terms of revenue than the government expected in the last year. Again, it's a golden goose, right? It's laying eggs. What do we see happening now, though? Because the government again is looking like it wants to keep its fingers very much in that pie around real estate and revenue it wants to derive from it, and yet wants to talk all the time about improving affordability in the province. Can it do both?
Well, yeah, the affordability challenge, it really is a vexing problem for governments. Here again, this budget, and this is my earlier comments about thinking some of the economic development measures that are purported to kind of strengthen and grow the economy. A lot of that funding was on and directed to exactly what we're talking about, housing. So traditionally, housing is more kind of in the realm of social supports, particularly when you're talking low income housing. But this government opted in this budget to put it in the economic development realm, which is fine because we do need housing. But again, a lot of that economic development, more social supports. What the government can do, this is another budget that is going to look to build low cost housing, low cost rental housing. Government has a long term plan for that, but it's exceedingly challenging given the steep rise in housing costs, and now we have a steep increase in building costs. So it's very much a situation where government continues to chase rising prices, and most of the policies, and this isn't a criticism in any way, because for the most part, federal and provincial governments are kind of boxed in this problem, but most of the policies that governments end up introducing to try and help buyers get into the housing market end up exacerbating the problem, because it just provides support and funding for more people trying to get into a market where there's a limited supply of housing. I'm not suggesting that governments really have any other option. They do need to continue to support and try and help lower income people with rental and getting into the housing market. But when you look around the world, Kirk, a lot of these, I mean, right around the globe, coastal cities like Vancouver all face high housing costs. So there's something going on more at a global level that really is driving up real estate in these coastal gateway cities. It's the same problem in Toronto. So, on top of that kind of global pressure, we've got local land constraint issues. So to my mind, it really is a tough and intractable problem in many ways.
Yeah, and you've got a lot of the housing stock picked up by investors. These are not people that own one home, but many homes. I want to get as we conclude here, an initial take here on what the situation in Ukraine has in the way of a potential impact for the British Columbian and Canadian economies in this. What are you projecting here?
It's pure speculation. International relations is outside the realm of my expertise for sure, well outside my realm of expertise. I am absolutely fixated and very much concerned, of course, Kirk. This is, to my mind, a very volatile situation that could escalate very, very quickly, and any sort of war on continental Europe is not at all good for any economy anywhere in the globe. I mean, who knows what happens to energy prices, more global supply chain disruptions, and then the prospect of a war actually escalating. I actually can't even comprehend it. What trying to make sense? I'm still trying to make sense of the pandemic and what the fallout from that was. Throwing the prospect of a major war in Europe on top of that, it really is incomprehensible, Kirk. I do not know. My initial inclination is it's not good and it's negative, and some of these deficits that are built in to this budget may turn out to be reality, very much reality, rather than surprising on the upside.
Well, I remember 2 years ago with the contingencies that were being put aside, and the finance minister at the time didn't even have a plan for COVID, and that was only 2 years ago. So there's no real plan in the event that we start seeing energy prices and a lot of other things convulse on markets as a result, commodities in particular, and supply chain issues as a result of this. But it's
you tweak my memory there. Just on the plan, I must say I was disappointed in the previous budget. This government said, with respect to returning to budgetary balance, that it was still too uncertain. The pandemic and the path of the pandemic was unclear, so it didn't commit to any sort of formal framework or plan for returning to balance. But it did commit to saying next year, which is this budget, it would identify a plan while we come to this budget, and there is no sort of tangible plan to get back to balance. And in fact, the plan is quite the opposite. It builds in deficits over the budget horizon, which is precisely the opposite of what it signaled last year. And again, missed opportunity to send a good, strong signal to investors in global markets that we are in strong.
We could talk about this for quite some time, but I was also struck by the fact that they lifted the penalty on cabinet minister salaries when they exceeded their budgets. You were getting a 10% reduction in your salary if you exceeded your budget. Well, that went out the window on Tuesday. So
and that's just another signal that this kind of notion of returning to balance over the medium term is kind of fading away as a guiding principle for this government.
Feels like a bit of a losing battle right now. Always good to talk to you, Ken. I really appreciate your help today and contributions to BIV with the writing you and Jock do every month for us. Thanks for your time.
Thank you. Thanks for having me on.
Ken Peacock is the Chief Economist at the Business Council of British Columbia. I'm Kirk LaPointe, publisher and editor-in-chief at BIV. Thanks a lot for watching.